I'm William Grantham with IchimokuWeather.com, and this is a deep market analysis of the ETF UUP, which tracks the United States dollar. If you are a FOREX trader, you might find this of interest to be able to work with your currency pairs. If you are a stock trader and interested in knowing what's going on with large caps, small caps, emerging markets, or developing markets in relation to the US dollar, this video will also be of interest for you. UUP is an ETF by Invesco, and it tracks the Dollar Index Bullish Fund. Under product details, it does show that this is a fund that tracks changes, whether positive or negative, in the level of the Deutsche Bank Long USD Currency Portfolio Index. The fund is designed for investors who want a cost-efficient, convenient way to track the value of the US dollar relative to a basket of the 6 major world currencies, including the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and the Swiss franc. If you are a stock trader or an ETF trader and decide to buy into UUP, you should know that this does generate a K1. Now, there's nothing wrong with K1s except for the fact that they tend to come in a little bit late during tax time, so you'll need to keep track of anything you trade that does have K1s and wait for your K1s to come in before you file your taxes. Let's take a look real quick at the Wikipedia page on the foreign exchange market for Forex. Under trading characteristics, it shows that during 2019, the United States dollar accounted for 88.3% of daily trades bought or sold. This is one reason why watching UUP can help you if you are trading a currency pair versus the US dollar. It also mentions that during 2019, the 3 top currency pairs all included something versus the US dollar. So here we are on a daily chart of UUP, our US dollar chart, and we can see that market action was doing well for a while, got above the 200 period moving average, was not able to hold on to that position, fell below the 200 period moving average, the Tenkan-sen, the Kijun-sen, came down to the top of the cloud, went inside the cloud. The bottom of the cloud held for about 3 days before market action then on the last trading day fell below the cloud. The blue Tenkan-sen and the red Kijun-sen are now separated, with the blue being below the red, meaning that we do have a bearish down channel. A cross of the 2 lines can be a trading signal. At this point, it would have been a weak signal being above the cloud for a bearish signal. If the cross had happened inside the cloud, that would have been a medium signal. And if the cross happens below the cloud, that's considered a strong signal. A Kumo breakout from below the cloud can also be seen as a trading signal, this time to the downside. Since it came out from the bottom of the cloud, it is bearish. Our lagging green line has also poked just below the bottom of the cloud, and that could give further momentum to the downside as our momentum indicator is now free and clear of market action and the trading lines above it. Our future cloud did go a little bit thick with a green cloud for a little bit there, but now it's getting thinner, and if we do have continued sideways action or a downtrend, we will see this green cloud twist into a red Kumo twist. Our weekly chart is also showing a lot of weakness for the dollar. We did have a bit of an uptrend here during the COVID drop. The dollar actually went up, and then as stocks started recovering, the dollar did start losing, and it came down, fell below the 200 period simple moving average on the weekly about mid-year, has been following underneath the blue line for quite a ways. Then after the first of the year, started picking up a little bit, got above the blue Tenkan-sen, and even got up above the red Kijun-sen for a couple of weeks, but now it has had a lot of weakness over the last few weeks as it's traveled down below both the red and the blue line and is now below both in a bearish downtrend. We are in a bearish downtrend on our long, short, and medium-term trend areas. The lagging green line is also free and clear. The recent market action going up and then down looked like it came up to try to challenge the bottom of old market action. Didn't even come close to challenging it before falling down and being free and clear to the downside. The future cloud goes all the way out into mid-October, and we can see that it is red. It was a bit thicker, and it's now getting a little bit thinner. However, it is still a thick red cloud that market action is going to have to get above before we'll have a long-term trend on the weekly. Resistance above starts with the Tenkan-sen at around 24.65, then the red Kijun-sen at around 24.76, then we have the 200-period simple moving average serving as resistance up at 25, and then the top of the cloud here is going to be the next level of resistance at 25.65. Moving in for a close view, we're going to go on to a 4-hour chart, and we can see where the market action was doing well, and then it came down underneath the blue Tenkan-sen, and then quickly passed underneath the Kijun-sen, causing a cross here of the Tenkan-sen, of the Kijun-sen, a selling signal here on the 4-hour chart. If you were trading a currency pair that was opposite the dollar, this could have been a buy signal for a strong opposite pair. Market action then continued to stay underneath the blue line, falling through the cloud very quickly, and then gapping down below, coming up and challenging resistance at the top of the Tenkan-sen. Not able to get through except for this one day here, opened and closed right above it, but it is a doji of indecision. Market action was not able to get higher or lower. The next trading period, we did gap down some, where we currently see ourselves quite a bit below both the Tenkan-sen and the Kijun-sen in a bearish channel and in a bearish situation being below the cloud. Our lagging green line is free and clear to the downside, offering more momentum from a 4-hour chart, and the future cloud has twisted from green into red and is now a red cloud that is getting thicker, more negative conditions for our 4-hour chart here on the dollar. So we are seeing the dollar being weak on the daily, the weekly, and the 4-hour chart. On the 4-hour chart is where we're first going to be able to see a turnaround, and that will be when price can get above the blue Tenkan-sen, and then price getting above the Kijun-sen, and then staying above it long enough to pull the Tenkan-sen up above the Kijun-sen. On my website at ichimokuweather.com, I do use UUP inside one of my lessons. In the course, Unique Ichi Uses, the first module is Intermarket Ratios. The first modules of all my courses are available as a free preview, so you don't even have to sign in to take them. However, if you do sign in, then you will gain gamification coins that you can use as discounts should you decide to take the course. Click on the See More, come into the page, scroll down, and then you'll see the link here on the course outline that will take you into the lessons. Within Module 1, we do take a look at intermarket ratios that can help you understand what's going on with market health, cyclical versus defensive, market versus bonds, bond prices versus yield, and inflation versus energy. We're going to be taking a look at a few of the charts in inflation and energy. In this lesson on intermarket ratios, we are looking at the commodity ETF PDBC versus UUP. Now, similarly to a currency pair, where the currency pair, the first one listed, when the chart is going up, it's doing good, and when the chart's going down, the second pair of the pair is doing good. The same thing happens here on this particular chart. When it is going up, it is good for commodities, and when it is going down, it is good for dollars. I was taught intermarket relationships from John Murphy, and I quote him here as saying, "As usual, looking at this chart, the rising dollar carries good news for some and bad news for others. For one thing, it's a depressant on commodity prices and precious metals in particular. In time, the rising dollar could start to weigh on the earnings of large-cap U.S. multinationals whose foreign earnings may be hurt. The rising dollar, however, favors small-cap stocks and companies whose earnings are more domestic. A rising dollar is especially dangerous for emerging markets, which are starting to lag behind foreign developed markets. Weaker emerging currencies are usually a bad sign for emerging market bonds and stocks." The screenshot chart on this lesson is showing that commodities are going up, and that's going good for commodities and bad for the dollar. Let's take a look at what it looks like in real time. On this current chart, on a daily intermarket ratio between commodities and the dollar, we can see that commodities have been doing quite well, then paused just a little bit, coming down, challenging the top of the cloud within the ratio, and then we're able to get back above the Tenkan-sen and the Kijun-sen and have been moving up quickly, showing that commodities are outperforming the dollar at this time. The next chart in the lesson shows the difference between materials and the dollar. We're using the Vanguard Materials ETF, VAW, versus UUP. So in this particular ratio, we're showing that the materials have been going up and the dollar has been getting weaker. The same holds true in our current situation. The materials sector has been doing well, and it is going up here on this intermarket chart, showing that it is outperforming the US dollar. I do videos at the end of the month taking a look at the different sectors, and if you've watched those, you know that the materials sector has been doing well over the last few months. In the next chart, we are showing the large cap stocks versus the dollar. When it's going up, the large caps are doing well, and when it's going down, the dollar's doing well. So in this situation on this particular chart, we can see that it has been doing well for the large caps. That's very similar to what's going on our current time, where we have seen that large caps did stall for a little bit here through the end of February and March, but then they started picking up again at the 1st of April and have been performing real well against the US dollar in this intermarket ratio chart. In this last chart, we're looking at emerging markets versus the US dollar, and on the chart here, it shows that the emerging markets were doing well and outperforming the US dollar, and we're going to see that that's the same thing that's going on our current chart. Here we are on the current chart. We can see that the emerging markets did stall a little bit at the end of February, came down, and the dollar was outperforming them enough to drive this intermarket chart underneath the cloud. And then we bottomed out here, and then we had emerging markets start to take off again against the US dollar, and they moved up, found a lot of resistance at the top of the cloud here, was not able to get in for quite a few days, and then on the last trading day did move up inside the cloud as we had continued weakness on the dollar. This is just a regular chart, not an intermarket ratio chart. This is the regular chart of emerging markets, and we can see it's very similar, where price action went up, found resistance at the bottom of the cloud, and then have now popped up inside the cloud, but it's a very thin part. As we know, market action can pass through a thin cloud easier than a thicker cloud, and right now we do have a tiny Kumo breakout with emerging markets. We also saw that the dollar is having a lot of weakness on the weekly, the daily, and the 4-hour. If you are a trader of ETFs and are interested in emerging markets, then this might be an available trade for you if you were looking at this and had your analysis that backed it up and were going on more than just my suggestion. So right now we do have a Kumo breakout that is happening here in emerging markets as it is moving up on its own chart. These are my observations, not recommendations. And so that's how you can use the ETF UUP if you're a Forex trader to understand what is going on with your particular currency pairs, especially if you're trading the currency pair that includes the US dollar. It also can help you do top-down analysis to understand any currency pairs, starting with the US dollar and then looking at the currency pairs that you're currently trading. If you are a stock trader or an ETF trader, taking a look at these ratios and even at the UUP itself helps you to understand a little bit about what's going on with large caps, small caps, materials, commodities, emerging sectors, and developed markets. I'm William Grantham with Ichimoku Weather.com. May your trades be true and your profits strong.